The Nightly Business Report is brought to you locally by 3M, worldwide supplier of healthcare products, and by City Business, the inside look at local business.
Alan Greenspan was on Capitol Hill today defending the Federal Reserve's interest rate increases, while investors and analysts on Wall Street tried to figure out what his next rate move would be. Good evening, I'm Paul Kangas in Miami.
And I'm Linda O'Brien. The second leg of the Treasury's quarterly refunding took place today. Analysts say the sale of 10-year notes turned out to be not bad.
And I'm Cassie Seifert at the White House tonight. President Clinton had a special briefing with business reporters today. His message, misinformation about employer mandates, has created a hysterical fear among small businesses.
NBR is made possible by Digital, an information technology company putting imagination to work. Franklin and Templeton Worldwide formed the more than $110 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, member of the New York Stock Exchange, serving the investment needs of individuals and businesses through more than 400 offices nationwide. And is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communication services worldwide.
Healthcare may be on the front pages now, but the White House and Wall Street were looking for a headline from the Federal Reserve today. The question, will Alan Greenspan raise rates again or won't he? And the financial markets were looking for clues as the Fed chairman made an appearance today on Capitol Hill. Dennis Moore reports.
If Alan Greenspan and his friends at the Fed don't raise interest rates again next week, they could catch a lot of traders with their derivatives down.
By the time that aggregate price indexes reveal that inflation is on the upswing, many imbalances that are costly to rectify have developed already.
He was officially on Capitol Hill to discuss long-term problems of monetary policy, but the markets were looking for confirmation of their short-term Fed forecasts.
I think the markets have concluded from the chairman's July testimony that a tightening in monetary policy is a foregone conclusion when the Fed meets next week.
And they took what he said as what they wanted to hear.
We have no alternative but to be forward-looking and to recognize that the policies that we are making today are really relevant to 1995 far more than they are relevant to 1994.
But the markets also got to look forward today from 50 top economists in the monthly Blue Chip survey. Their growth forecast for this year and next slipped 0.1 of a percentage point each to 3.6 and 2.7% respectively. The 94 CPI inflation forecast held steady at 2.7%, but the 95 inflation number also dropped 0.1 of a point. Well, none of the Greenspan inflation comments was new, nor his pronouncement on the dollar's role as a world reserve currency.
It's crucially important that the dollar be a strong and viable currency.
But their mere repetition reinforced the expectations of an imminent rate increase. The other question is how much, 1/4 or 1/2 of a percentage point. Reuters' survey of Wall Street economists found them divided on the size of the rate increase. They think the determining factor will be the size of the increases for wholesale and consumer prices in July when the reports come out tomorrow and Friday. Dennis Moore, NBR, Washington.
Analysts say the second leg of the Treasury's quarterly refunding produced reasonable results today, but Paul, did it generate much enthusiasm on Wall Street?
Well, the auction of the 10-year notes did not have much impact on trading because it was largely a professional sale. The Treasury's auction of $12 billion worth of 10-year notes produced an average yield of 7.33%. The Treasury will sell $11 billion worth of 30 1/4 year bonds tomorrow.
The 10-year auction turned out to be better than people expected. Up until the last minute, there was talk of no retail demand, but they really had a fairly tightly bid auction. There was no tail, meaning that all the securities were sold with one yield on them. And it looks like demand appeared better than had been expected before the auctions began.
Not knowing how the note auction was going to turn out early today, bond traders were wary and hardly in a buying mood, so the market moved moderately lower until word came of Federal Reserve Chairman Greenspan's kind words about the need for a strong dollar. Then, after the 10-year note offering turned out to be better than expected, prices firmed up further until tax-free and corporates closed unchanged and long-term governments posted just tiny fractional losses like the 30-year Treasury off only 2/32 of a point. Lehman Brothers long bond index actually gained 0.28, and we see Fed funds closing just where they did yesterday at 4 3/16%. The fact that bond prices were just small fractions lower early today helped the stock market open on a firm note, which surprised a lot of bearish traders who then covered some of their short positions, giving those stocks buying support. At 10:30 this morning, the Dow Industrial Average, after gaining 2 points yesterday, moved up another 11 2/3 points. The upturn gathered momentum over the midday hours as the advanced decline ratio turned 11-9 positive following Federal Reserve Chief Greenspan's testimony in favor of a stronger U.S. dollar. And by 1:30 p.m., the industrial average posted a 19.5-point gain. The gathering nervousness over what tomorrow's producer price index report will show on the way of inflation took some of the wind from the market's sails for the rest of the day, and the Dow Jones Industrial Average saw its closing gain cut to exactly 11 points, putting it at 3766.76. Kind of interesting, we closed 10.36 points below the high of the day and up 10.36 points from the low of the day, right in the middle of the range, exactly. And volume picked up considerably by about 20.5 million shares from yesterday, and a lot more up volume than down volume, about 78 million shares. The Dow Transport's up nearly, well, a little over 5.5 points, and the utilities up 0.79. The closing tick just slightly bearish at -23. The Standard & Poor's 500 index up 2.37, the 100 up 2.11, mid-cap 400 gained nearly a 1.5, while the Commodity Research Bureau spot index was down 0.31. The New York Stock Exchange Composite was up 1.24, similar gain on the value line, and the Wilshire 5000 was up 21.70. I'll be back later to show you where the action was on Wall Street today. Cassie?
Paul, the Senate plowed full steam into the formal debate on health care reform today. President Clinton invited a dozen business journalists to the White House to counter what appears to be growing business opposition to health care reform. About a dozen business groups which are either opposed to or uncomfortable with the Mitchell health reform bill now before the Senate met for the second day in a row to try to develop a common strategy. Several of the groups previously backed the Clinton plan, but say the Mitchell bill doesn't do enough to control costs.
The government is saying, trust us, just send us a check every month, we're going to take care of it, and you're not going to have to worry anymore. And there are very few small business people who believe that, and now there are very few large business people who believe it also.
The president called out the head of the Small Business Administration and the governor of Hawaii, where employer-mandated health coverage has been in place for 20 years, to try to reassure what he called an almost hysterical business community that reform can work.
We don't do something to address the health care crisis in this country, almost no small business is going to be able to afford it in the future. You know, we're going to continue to have these annual increases in the cost of health care of 20 to 50% a year. And we're not going to be able to attract or keep a high-quality workforce.
On the Senate floor, an amendment by Jesse Helms of North Carolina to postpone action on health care until next year was defeated. And the president got a lift from the 33 million member American Association of Retired Persons, which had fought against reform until today, but said that if health reform isn't approved soon, it may never get done.
The message I get from our members, the time is now. Let's do it and get this underway. We've waited far too long to reform health care.
In the briefing today, the president seemed to lament the late arrival of support from the AARP and said that businesses who still support health care reform had better get vocal because opponents have gained what he called a strategic advantage. Paul?
Cassie, how did the president say businesses should work out their concerns?
Well, he explained that he wants businesses to back the Mitchell bill now to get some sort of health care reform in place, and then later to work out their differences with a congressional conference committee. But businesses don't all seem to think that that's a good idea. Paul?
Thanks very much, Cassie. Still ahead, we'll hear more on the health care reform debate from Jim Klein, who's trying to organize a coalition of business groups to come up with a coordinated strategy.
American Cyanamid today urged its shareholders to put off a decision on whether to tender their shares to American Home Products until the board issues a recommendation. Cyanamid added that its board will meet within 10 days to consider the $90 a share offer. Meanwhile, American Home Products said today it's received a commitment from Chemical Bank to finance the bid. American Cyanamid stock lost an eighth today. American Home Products gained 5/8 to close at 56 7/8. Kidder Peabody reportedly lost a record $50 to $60 million in July due to losses in its mortgage-backed bond division. The Wall Street Journal quotes sources who say Kidder managed only one new mortgage bond deal last month, raising $500 million. And the Journal also said Kidder could post its third consecutive quarterly...
9 down, and only 3 more new lows for the year than new highs. Topping the active list was Merck on 5.4 million shares, moving up 1 3/8. The drug group it was firm today in general on indications that a lot of money managers are turning positive on that group. Dillard department stores fell 4 7/8 points. Second quarter earnings were lower, 30 cents down from 35 cents last year, and Lehman Brothers Brokerage downgraded the stock from outperform to neutral. No change in Walmart today. Micron Technology up 3 1/4 points. Yesterday's Wall Street Journal indicated that Jeff Vinnick, who manages the Magellan Fund for Fidelity, likes a lot of the high-tech stocks, and Micron might be one of them. Telmex down a half point today. The Bolsa Index in Mexico fell 20 1/4 points. GE, there you see it, down 5/8 of a point. Weirton Steel down a quarter, made it into the active list because the company began today a secondary offering of 17 million shares, priced at 8 1/4. National Semiconductor up 3/8 of a point. Magellan's manager Jeff Vinnick likes that stock in particular. IBM dropped a quarter but was up nicely yesterday. Union Carbide up 5/8. It could benefit by that the plant explosion in Louisiana of the ethylene plant owned by Exxon. Union Carbide makes that particular chemical. Georgia Pacific was up 1/2 of a point. Payne Weber added the stock to its focus list today. Hewlett-Packard up 2 1/2 in that strong high-tech sector. Procter & Gamble rose 1 3/8, although the company, well, it did report a nice turnaround in earnings. Fourth quarter, 56 cents versus a loss of $1.83 last year. That loss included some big losses on derivative trading for P&G last year. Texas Instruments up 3 7/8. It was mentioned positively by Jeff Vinnick of Fidelity Magellan in yesterday's journal. United Technologies up 1 1/4, joining that high-tech rally. And then Whirlpool rose 1 3/8 points. Lehman Brothers upgraded the stock from outperform to buy. Rexine up 2 3/4. Some analysts think that this company could benefit from the Exxon ethylene plant explosion over in Louisiana. It could reduce supply and boost ethylene prices. That's what Rexine does. Cypress Semiconductor up 1 1/4. Another of the semiconductor stocks responding to the Fidelity Magellan story. Grand Casinos rose 1 full point, with a little higher during that today. Financial reporter Dan Dorfman says he sees continuing takeover speculation, and also quoted an analyst from the J.W. Charles Brokerage who's just bullish on the company's fundamentals. Franklin Quest up 1 5/8. Merrill Lynch reinstated a near-term and a long-term buy today. Also, it named it the focus stock of the week at Merrill. New York State Electric and Gas, one of the big percentage losers, down 4 1/8. The company said it doesn't expect to earn the allowed return on its common stock equity in 1994, so its board will review the common stock dividend level each quarter. Currently pays 55 cents quarterly. That's better than an 8.5% yield. Mallinckrodt down 1 3/8 after dropping 3 points yesterday when the company said it sees first half 95 earnings growth below the company's target. Over the NASDAQ trading, a gain of 5.16. That's the best move upwards we've seen there in a while. And look at the volume, 326.4 million shares. That's the most active we've seen for a while. About 17 stocks up for every 14 lower. Intel topped the active list, rising a half point. Microsoft up 5/8. And Lotus Development doing very well, up 4 5/8. Goldman Sachs made positive comments on Microsoft and Lotus Development, as well as Sybase. Dell Computer up 1 3/4. Applied Materials up 2 3/4. Sybase, there you see it, up 2 1/4 points. Amgen gained a quarter. Novell lost 11/16. Cisco Systems down a small fraction, and MCI dropping 5/8. Adtran, this is a new issue, went public today. 2 million shares offered at 18. It makes digital transmission products for phone companies. Had a good first day. Flextronics International gained 2 points. It went public at 14 last March. It's a Singapore corporation, manufactures printed circuits. Today, Montgomery Securities repeated a buy recommendation. And Valence Technology moving down 1 full point, a first quarter loss of $1.09 versus a loss of only 17 cents last year. The American Exchange Index, a gain of exactly 1 3/4 points there, and volume up about 1.7 million shares from yesterday, 308 up, 260 down. Cheyenne Software for the second day running topped the active list. Today it traded about 700,000 shares, losing a quarter. SFM Corp, look at that move, up 5.5 points. Look at their earnings, second quarter, 60 cents, way up from 19 cents last year, and sales were sharply higher. The company manufactures electric motors. And then Intelcom Group up 1 1/8. The company recorded record third quarter revenues, but it had a 41-cent loss. The company blamed that on some sacrifices to accelerate its growth. And that's our Wall Street wrap-up. Cassie?
Well, the White House was telling us today how good health care reform would be for businesses. About a dozen of the most influential business groups here in Washington were meeting because they're all unhappy with the Mitchell plan now being debated by the Senate. I talked earlier with the man organizing that meeting, Jim Klein, Executive Director of the Association of Private Pension and Welfare Plans.
What's absolutely interesting at this point is that at the point of the debate where usually coalitions are falling apart, we now have a scenario whereby all the different organizations are falling in line, coalescing behind a common message, which is that Senator Mitchell's bill is not a modest alternative to the President's bill or to the House Leader's bill. It would do irreparable harm to the health care system.
Would you like to stop health care reform now rather than go forward with the bills that are in Congress?
I think all the organizations would like to see sensible health care reform achieved. It appears that that can only be achieved if we can defeat the Mitchell bill.
And what about the bill, the Gephardt bill in the House of Representatives?
That clearly also is unacceptable. It has its own set of different problems. But right now we're very much concerned. What really brought the groups together is the creeping sense that perhaps that the White House and the Democratic leadership of the Senate is effectively arguing that the Mitchell bill is somehow a more modest alternative which would not do a harm that would set us on the road to health reform. In fact, for the millions of employers of all sizes and the workers and families who they serve with health care, the Mitchell bill would be a big step backwards.
Be more specific about what it is in the Mitchell bill that all of these groups are finding unacceptable.
Well, the Mitchell bill contains huge health care alliances. The notion that the alliances, purchasing alliances from the Clinton bill are dead is simply not true. There are incredible amounts of new bureaucracies. For large employers, organizations representing large employers like my own, the fact that it would be no national uniformity in terms of the rules, that the individual states would be able to set up their own approach to health care reform is very problematic. I think at this point what the President and the congressional leadership has to face up to is that if we are going to have any health care reform this year, then it's going to have to be something much more modest that is going to do some good and no harm. But if they can't decide upon that, if they're going to fall on their sword over pride, then it would be better for the country for them to simply start again next year.
The business groups at today's meeting are still trying to decide on a common strategy and hope to reach a consensus by Friday morning when they've scheduled a news conference. If they agree to wage war against the Mitchell bill, they could influence the 5 or 6 senators whose votes are needed to approve health care reform. Linda?
Cassie, Japan's central bank offered some encouraging words about the Japanese economy today. A Bank of Japan governor told a news conference in Tokyo that the economy is finally headed for recovery. However, the recovery comes at a time when American investment in Japan is slowing down after a busy first half of the year. As Lucy Kraft reports, analysts are concerned the slowdown could encourage bearish sentiment among Japanese investors.
For the first 6 months of this year, foreign money, much of it U.S. mutual funds, powered a more than 20% rise in the Tokyo stock market. Foreigners bought more than $40 billion worth of Japanese equities, accounting for a remarkable 1/3 of all stocks purchased on the Tokyo market. But by late June, with the yen hitting post-war highs, the rush of foreign investors had screeched to a halt.
There were 2 reasons. One was that the market had performed so well since the beginning of the year, but the second thing was the currency. Once the yen dropped or rose above the 100 level, it prompted a lot of people to rethink their profits in terms of currency, and it was an easy thing to do, to take profits based on that.
Hardest hit were the stocks that foreigners tend to buy, namely export-oriented blue chips, especially well-known electronics and auto companies. While the value of shares sold is far less than those purchased in the first half, analysts say the fact that foreigners have turned bearish has had a chilling effect on the market as a whole.
Obviously has an effect on sentiment, because domestic investors are very worried that foreigners will rush for the door at the same time, in the same way as they all squeezed in through the door.
The foreign stampede into Japanese equities may be over, but Japan's economic recovery has just begun. And that means, analysts say, that over the long run, Americans and other foreigners will continue to be net investors in the Tokyo stock market. Lucy Kraft, NBR, Tokyo.
Toyota said today it will move production of all compact pickup trucks sold in the U.S. from Japan to a California plant it shares with GM. Toyota has been studying the move for several months as a way to offset import taxes and the effects of the higher yen, which erodes the profits of Japanese exports. The plant already builds some compact trucks as well as the Toyota Corolla and Geo Prism cars.
Coming up, tonight's Money File looks at an alternative living arrangement for older people.
The European Commission said today it plans to clear an agreement between mobile telephone operators in Germany, France, and Britain to make international calls cheaper. Network operators currently add a surcharge to calls made on a cross-border basis, but the new venture could cut costs because it would provide a one-stop shopping and billing service to any customer of the companies involved.
TCI refused to comment today on published reports its Liberty Media division is in talks with Nike and Canadian brewer John Labatt about a joint bid for Viacom's Madison Square Garden. Labatt says it is talking about a deal. Viacom is trying to reduce debt from its buyout of Paramount Communications, and it reportedly wants $1 billion for the garden. Final bids are due next Monday.
Tonight's Money File, Jonathan Pond, author of the New Century Family Money Book, looks at a new housing option senior citizens might want to consider.
One of the biggest challenges confronting senior citizens and their children is housing decisions. Fortunately, there are a variety of available senior housing arrangements. One of the more attractive options is the continuing care community. Designed to meet the changing needs of their residents, continuing care communities typically offer 3 different living arrangements in one location: apartments for independent, active adults, assisted living quarters for those who need some help with their daily activities, and a nursing care facility. Continuing care communities usually require a sizable entry fee and a subsequent monthly fee. But once a senior enters a continuing care community, he or she will be able to receive any required care, including the nursing home. Because this is a relatively new concept which involves a major financial commitment, there are several financial matters to consider when evaluating a continuing care community. First, the financial status of the community. While rare, some communities have gone bankrupt. Also, check the current occupancy level. Low occupancy could signal future financial problems. Find out whether the initial payment is refundable if you move out and what services are included in the monthly fee. And finally, check to see how much the monthly fee has increased over the past few years. I think the continuing care communities are well worth considering. This is Jonathan Pond.
And that's NBR for Wednesday, August 10th. I'm Linda O'Brien. Thanks for joining us.
And we want to mention that Cassie will be away for a few weeks. And you ask why? To get married, that's why. And all of us here wish you all the best, Cassie, and we'll see you after your honeymoon.
Thank you very much. I'll see you soon. That's all from Washington. Good night.
Once again, best wishes, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
NBR is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communication services worldwide, and is made possible by A.G. Edwards, providing personalized financial services and investment advice to individuals and businesses. A.G. Edwards, a century-old tradition of service to investors. Franklin and Templeton Worldwide form the more than $110 billion Franklin Templeton Group, a global alliance of over 100 mutual funds and investment products, including U.S. government securities funds. Digital, an information technology company putting imagination to work. And by the financial support of viewers like you. With more than 4,500 mutual funds available, how do you identify those that are right for you? Find out in NBR's new video, How to Invest in Mutual Funds. To order by credit card, call 1-800-535-5864.
The Nightly Business Report is brought to you locally by 3M, worldwide supplier of healthcare products, and by City Business, the inside look at local business.
Nature, documentaries, science, politics, you name it, we've got it here on Channel 2.
Summer camp. Everything you remembered and more. Summer camp.
The deep sea is merciless. There's no room for error. Since ancient times, sailors have known that knowledge is power. Whoever rules the ocean rules the world. Today, knowledge is still power, only the tools have changed. A new age of exploration has begun, from the ocean's farthest reaches in the Antarctic to its darkest depths. I'm Leonard Nimoy, and this is the story of sea power.
Friday night at 9, here on Channel 2.
Wednesday night's broadcast schedule is brought to you in part by Horton, manufacturer of truck cooling components and industrial clutches and brakes. Health Partners. The Health Partners' mission is to improve the health of its members and its community. Cargill, supporting Minnesota's tradition of community service. And by the members of Channel 2.